So another big round of applause, please, for Rebecca, for Puawai, and for Craig. And also for skedaddling so that we could steal their mics off them and put them onto our next panel who are waiting on the side there. Our moderator is Ainsley Simpson, who of course, as we know, is our Chief Executive Officer. The panellists are Dean Spicer, Head of Sustainable Finance at ANZ, Michael Rowan, Chief Financial Officer from Meridian, and Sarah Sinclair, Chair and Partner of Minter Allison Rudd Watts. So a big round of applause, please, to welcome them onto stage.
Well, good morning again. A very special welcome to this particular panel. And I will remind you, we're kind of moving to our next lunch, and there's no such thing as a free lunch. So this is going to be a really interactive panel. I encourage you to post your questions in our event app, but let's get started. Sustainability is starting to mainstream. And for those of us in the room that are quite close to the fire, what we recognise is that sustainability is following a very similar maturity model to safety. It starts with compliance, it builds to be somewhat of a competitive advantage, then what we see is it starts to actually become a commitment and a culture. But when you start mainstreaming, what tends to happen is it gets a bit hot in the kitchen, and that means that accountability tends to flow up to the top as well. And we are starting to see a much greater focus of sustainability and ESG in boardrooms and around executive tables. The panel we've got today have got both executive experience and board experience. So we're going to explore what's changed, particularly over the last 3 years. We've been talking about it a lot this morning. The momentum has been building. The intensity is increasing. The complexity is increasing. So what have you each seen over the last 3 years, and how are you seeking information in a different way as a result of that? And we might start with you, Mike.
Thank you, Ainsley. I reckon your analogy is a good one. I do. Made me think for a second. Safety, changes within the safety frameworks within businesses, as you say, started with compliance, moved to reporting, and now form part of the DNA within businesses generally. And I would say the biggest change for businesses from an ESG perspective is it does follow that same track. And I think that ESG now forms a central role in the strategy making process within businesses. And I think the core reason for that is that the global economy, it's electrifying. Right, so we, or whether we like it or not, as a bunch of people, global decision makers, have decided to literally rewire the global economy so that it converges around a singular fuel, being electricity, to try and mitigate the impacts of increasing temperatures, which then bring on all sorts of challenges for us that have been discussion here, but. That has massive implications for New Zealand infrastructure, and for New Zealand businesses. New Zealand's got promises that it's got to keep up. So if the globe's electrifying, we need to make sure that we do and play our part. Infrastructure providers, I think, have got the toughest job because you're deploying assets over such long periods of time, and the one thing I tell you is you are going to need to focus in on how relying on that singular fuel, being electricity, impacts the decisions that you make, because this roller coaster is going to continue for the next 20 years. And then for businesses, our reputations, the products that we sell, are all impacted by the choices we make about how we fuel our businesses. And as I say, we're either decarbonising or electrifying our economy alongside the rest of the planet. So the capital flows are huge, the physical implications of it, and then the reputation of businesses it all ends up around that board table, and I think ESG forms the central theme and core for most decision making going on within boards, but it's just a view.
Sarah, what are your perspectives?
Well, I spend my life in infrastructure, and it's a very happy place to be. And some of you would have heard me say before that infrastructure, I think, is the answer to whatever question you might be asking. And within that, I think we're seeing the second part of that answer being resilience and sustainability. So to what Mike's talking about being in the energy space, I spend my time in energy, water and transport currently, and we're seeing those same drivers across those systems. However, I think and I sit on the Infrastructure Commission, and we're doing a lot of it through the work we're doing there as well. However, I think, although that is my very happy place, my other happy place is sitting in my capacity, I think, here today as chair and partner of Minter Ellison Rudd Watts, and we are a law firm, so what do we do in this space? And I think that has been quite a challenge. So we're not Meridian, we're not Waka Kotahi, we're not sort of Nike worrying about our employment practices, we're not VW. So what do we do? But we are an important part of that supply chain. And one of the other ones actually that I was thinking is quite similar. I sit on the board of the Housing Foundation, which is a marvellous charitable organisation, for those of you that know it, with the mission of alleviating poverty through the provision of affordable housing. But both of those, we have a much smaller and different role, and you can sit there thinking, well, what's our role? What's our role as a law firm, bunch of lawyers sitting in a pretty nice office downtown. And I'm happy to say that we've had a strategy around ESG since 2020, and we've had a very strong strategy that is our 2021 to 2025 strategy. And we have that under a number of pillars that look at planet, people, and how we work in the environment. And we do that for two reasons. One is because we are part of this supply chain, and so at our board we are saying we must be part of this. It's being requested of us when we're going in and pitching for work for whoever that is, like, what is your strategy? We've actually shared it with clients and they think it's great, and we're ahead of some, I'm happy to say. And the other thing is that we have to do it for our people. It just absolutely demands it. It's an internal and external looking strategy. We are looking at how we all travel to work, how we measure our waste. We've got all of our diversity and inclusion policies within this as well. So how we're rolling out full Te Ao Māori for the next 2 years across a proper education program through Victoria University for all of our people. We have a whole range of things around community investment programs and very specific targets. 90% of us will be contributing to our community investment programs. 80% of us will be coming to work in a sustainable way, that we also put in brackets, including partners. So you might like your V8 something or other, but that's not what you're going to be using by 2025. So I suppose my point is that at the board of Minters, and similarly what I'm seeing in the board of the Housing Foundation, where we don't do the work ourselves, but we finance that. So how do we do sustainable finance? We have a supply chain. How do we make sure that sustainability and resilience is in our supply chain? So I'm just an example maybe of that further down the chain and sort of not being so obvious, but we also are doing it, and we're seeing it as extremely important, and it's resonating very, very strongly with our people. Dean?
Great. Well, look, the 3-year horizon for me is quite apt. So I made a switch from capital markets into sustainable finance exactly 3 years ago. And what I can recall at that time is that initially some of the conversations was, well, why would we do sustainable finance? Tell us why that makes sense for us. And I think there's been a real tipping point around not long after I sort of picked up the role, where the question very much became, how do we do it? And that tipping point initially was a regulatory shift, and that was the announcement that climate-related disclosures were going to become mandatory. And so suddenly, I imagine a lot of board levels, they thought, this is a mandatory reporting disclosure. We need to take responsibility for this, or we will be expected to take responsibility for it. And that changed the conversation. But I think today, if you're sitting there needing to be prompted by regulatory changes, then you've probably missed the story. And I think the story really very much is that this is a global megatrend. I think businesses that have embraced megatrends in the past have tended to do pretty well, and those who haven't, not so well. And I think we had the panel this morning talk about the power of purpose, and that is becoming a bigger part of why people want to work for companies today. So one of the comments from the early panel as well was sort of talking about trying to choose who I'm going to work for. So attracting staff and retaining them is paramount. If you want to maintain your markets, and certainly New Zealand is a large exporter, then we know that that's becoming paramount. And we're also a huge importer of capital to fund a lot of things, including housing and infrastructure. The banking sector is a conduit for that, and we've been told when we go to raise capital to fund that, that they're expecting to see banks act as a mechanism for driving sustainable outcomes. So we have a responsibility to our customers to make sure that that we're working with them to deliver some of these expected outcomes. Obviously, the main one at the moment is around emissions reductions, but the next big thing is obviously going to be around nature and biodiversity, which is going to raise some equally big challenges for us all.
Oh, thank you. I'm quite keen to explore risk appetite, and we don't generally like to talk about that outside of our own boardrooms. But when you think about ESG, there is mounting pressure through multi-stakeholder engagement on the matter now. You've mentioned your shareholders, you've mentioned your workforce. There's all the stakeholders that we engage with. Today we've been focusing really closely on mana whenua. But the reality is with all of those stakeholders, also comes a level of risk when you're in an environment where we're increasingly finding more and more expectation on reporting, on disclosures. What's the perception around when in doubt, disclose? Who wants to go first?
Well, I'll start from, these guys probably have bigger disclosure considerations than we do, so I'll start with the soft waffly stuff. So I think actually it might be, for us it's very linked to purpose, and if I can give you a few examples of where we were the first law firm, and I think there's only a grand total of 2 now, after 2 years, to actually disclose our gender pay gap. Now, this was incredibly important to us. We've been measuring this for some time. This isn't equal pay for equal work. We've had that now for quite some time. This is the systemic difference structurally around pay gap, and it shows how more senior roles are held and there's a disparity. So it's a real structural long-term issue. When this came up in the ability to disclose our gender pay gap, took about 5 minutes around our board table. It was entirely aligned with our purpose, and the conversation was, come on, quick, get out there. We want to be the first. Like, we want to show that we're the first ones out there. We want to beat the others. And then it was, frankly, crickets for about 12 months, and we were really shocked, but we were fine with it. We were like, wow, we can't believe other people don't want to be showing this, because it's such a, it's really important conversation for the community to have around structurally how women and ethnic people represented through law. So I think it's linked to purpose, and so we had a very strong appetite, and yet still there's a whole range of people saying, no, we're not going to disclose that. Equally, you can say it across a range of things. We're Toitū certified, we're rainbow ticked, we're doing a whole range of things like that we think are super important, and we'll disclose. We're very happy. We're all up for transparency. Transparency, sunlight's the best disinfectant. But that's linked to our purpose.
Others? What are your perspectives?
There's already a couple of things I've heard that I really like is sustainability is a global megatrend. It's a bloody great line, Dean. It's true. When it comes down to business, is we require people to invest in us. Right, they need to take money out of their pockets, and they need to hand it to us to do things that are productive. And their confidence relies on understanding what we're doing in our businesses. And the only way to give people confidence is to disclose what you're doing with their wealth. And, global megatrend means there are more people that are going to invest into sectors of the economy that support that transition to a more sustainable future. The easiest way to do it, to provide confidence, is to disclose what you do. You're not going to get it right all the time, right? Businesses manage risk. That's part of it, whether we like it or not. We're largely chasing our tails in relation to risk, and we're trying to create value at the same time, but reporting is the means of conveying what you're doing with other people's money to those people who have given you that money, and giving them transparency. You stole my line. I had that sitting there.
Yeah, but we don't give transparency in legal firms about what we're doing with the money.
I love that. Sunlight is the strongest.
It's the best disinfectant. Right?
Yeah. It's the truth, right? What do we all want to know about what's going on? It's like, what are you doing? And so, reporting disclosure of risk is the least that you can do when you're entrusted with someone else's funds. And I think there's the Task Force for Financial Related Disclosures, the TCFD reporting that next year will become a mandatory standard under the New Zealand climate standard changes. So for larger businesses, we're going to need to comply with those disclosures. But that reporting framework, it exists, it's out there, it's really quite simple. And everybody running large businesses in New Zealand should be deploying it. They'll have to next year. This is your chance to actually get a sense of whether you're conveying it appropriately or not. And I really like greenhouse gas inventory reporting. I know it's, anyone who's done it, it's complex and you can get it wrong. But again, it comes down to you're telling people what you're consuming and what you're using, or, in greenhouse gas is what you're emitting. But it just builds confidence, the layers of reporting within a business. Yeah, there you go, thank you. That's a far better word, trust. Which is what you need. If we are going to transition this change in the way that our economies work, is we need the confidence and trust of those that are going to need to invest.
I'm going to answer in a slightly different way. I agree with everything you're saying. Ultimately, I think certainly if you are captured by the mandatory climate disclosures, then you need to be able to capture data, and certainly as a bank, the easiest way to do that is having our customers disclose information to us so we can capture and get more accurate information ourselves. But I think the data piece is huge, and I think sustainability and big data is basically going to come together very quickly, because you can only accurately disclose what you can measure and what you can capture data for. And again, I think from the disclosure side, you're absolutely right. The expectation is that disclosure will become more fulsome over time because we'll have better data and better ways to disclose it. And so I think the expectations is going to rise. And I don't think the regulatory disclosure requirements are necessarily keeping pace with stakeholder asks. So certainly, again, coming back to, I've worked in capital markets, I'll come back to that analogy. As you go and speak to investors, each time you go back, you'll find that they have dug a little bit deeper and they want more information. So this is just going to be the new world we live in, where you'll be expected to show the impact of your business. And I think that's a good thing. I think the supply chain aspect is really interesting, because it doesn't matter how big your business is, you're going to be part of someone's supply chain, and ultimately you're going to be captured by this trend as well. So there's a lot to that, but I think the world we live in is going to be where everyone wants to understand not just your financial performance, but the true broader impact of the business. And at the moment, the focus is on environmental aspects. Certainly social impact is going to come close behind that.
Well, certainly this audience truly believes in measuring what matters, because what gets measured gets managed. And I think that's really where you're starting from. On that side of things, though, it's great if we can have some interaction and a couple of questions from the audience. And if you're online, you know that you're already in full flow today, so make sure that those questions are coming through. Where are you seeking your information when you are being asked to disclose? Where do you go? Is it different from where you might normally have sought out the data or the information? Are you exploring new channels for that information?
I'll kick it off. I mean, so the job I work in today is in sustainable finance. We work with our customers, including Meridian, who recently issued a green bond. But ultimately, what we're looking for there is we need to have the data to be able to, because a lot of our transactions have sustainable performance targets embedded in them. We're basically, they're forward-looking ambitious targets which have a pricing mechanism that adjusts for the achievement of those outcomes. And so the data is absolutely crucial for that. And so I think certainly carbon accounting is now reasonably strong across the ecosystem. So that's probably the pivotal one that's pretty much in every transaction. And then you're looking at what are the material issues for that sector or that company, and that can become more and more challenging depending on what you're trying to capture. So, if you talk about waste, for example, then that can be challenging because it depends on what sector you're in and just how much information is being captured. So at the moment, we're at the starting point, and that's why I think say big data is going to be huge. Because going forward, we'll have a lot more credible, strong data to rely on, and that's going to probably make life a little bit easier. But if you don't have the data and you can't verify the data, then really there's nowhere to go with that. So it is a challenge in some areas. I also think when you look around and we're starting to see some of the other data points that are captured, water is going to be a huge one as well, and we've already got companies reporting internationally on their water footprint as well as their carbon footprint. So this is starting to move quite quickly, and again, I think the expectation on the dashboard of your impact is only going to get stronger.
Yeah. What's quite useful is that you're making reference to multiple different kinds of metrics as opposed to just having a microscope on carbon when we actually need binoculars for the wider impacts. The great news is that Anonymous isn't with us today. They tend to pop up in every other conference I attend, but they're not here today. So we're going to call out a question. This one's from Donny Yap, and he asks, what lead and lag indicators do you look at when assessing the sustainability credentials or performance of an investment? That might be one for you, Dean.
Of an investment. Well, look, I think there's a few things we look at when we're trying to assess, I suppose, the sustainability performance of a investment or organisation. And if I think again about what we're sort of seeing in the marketplace that various investors are using as well, I mean, a starting point are ESG ratings that are out there, because I think that's a great way to filter. You can sort of see what someone else has come up with in terms of the strengths or weaknesses of a particular profile, and that may give you somewhere to go and look. And we do look very closely at the disclosures that companies are putting out, and obviously that gives you a good starting point, either because they haven't disclosed certain information or in many cases there's some great reporting coming through. But ultimately, I think we do also rely on engagement with the businesses that we're working with, and so we think we believe we've got a role to play in terms of engaging regularly with our customers and understanding their sustainability strategy, and also sort of indicating where we see opportunities or what trends we're seeing that may be relevant for their business as well. So, as a bank, our financed emissions is what we're focusing on. ANZ's joined the Net Zero Banking Alliance, and I think it's about 40% of banking assets are now aligned to that. And so the only way you're going to achieve, as a bank, reduce your finance emissions is actually working with those who you lend to, and working with them. And so I think that's that tends to be where we're spending our time in terms of our engagement.
Yeah, that's great. Now, the next question's from Sam Turner. It's quite an interesting one, because while all of you are from fairly large firms, your supply chain, which you've already mentioned, tends to be, a full range and full spectrum. Sam's question is, for small to medium businesses, ESG is a different prospect to larger companies. If SMEs are the so-called powerhouse of New Zealand's economy, how do we integrate ESG at this level? It's a powerful one.
It's a great question, and the first there's a combination across the three questions. I think is how do you get on top of this? Like, what do you look for in terms of ESG? And first thing is you find yourself doing a lot of reading, right? This is new for everyone. There's no guru that's out there that's kind of shining a torch or telling you which way or what you should do. It doesn't exist. But as Dean said, there are indexes out there for larger businesses that you can track. They're global indexes that give you an indication of companies that are doing things related to their ESG performance that make a difference in relation to those indexes. We're all being screened, whether we like it or not. we use Dow Jones Sustainability Index, there's FTSE for Good, there's CDP, there's many of them, but they'll give you an idea of what to do. I think for a smaller business, you know your business really well. Like, you know the fundamentals. You come back to that kind of my reputation, the products that I sell, the goods and services that I sell, and the attraction of young, capable talent rely on me or our business showing that we're doing things that will sustainably manage, their futures. And if you start from nowhere else other than frame up the things that you do, and then look at where you have the biggest impact on either the use of products, the biggest impact on natural resources, and or rely on people, you'll hit the nail on the head. ESG is a frame, but it really just tries to capture the impact that you're having by producing goods and services. So you can get advice, you can look at indices, but the smaller the business, the better you know the working of your business and the clearer the idea that you will have about the elements that you should focus on to improve sustainability.
And I think if you're in this room, you're a part of some of the largest and some of the smallest organisations that are deeply committed to sustainability. So surround yourself with good people.
I think also if you can really go to what was being talked about before about starting with your values and purpose, because I think it's a great point that Sam makes. We're a relatively small organisation compared to these two monsters on either side of me as well. And it was actually, we needed to invest quite a bit of resource just in a law firm to become Toitū certified, to get the rainbow tick, to actually start gathering and producing all our data to be able to disclose our pay gap. It actually takes, full-time humans to do this stuff, and that's a big investment. But where we started was, what are our values, what are our purpose, and what are the things we're going to do under that? And we just wrote it down and committed to how we, how we engage with the community, how we actually, change our own supply chain. Even really small, we had one she's gone to London now, deeply passionate person about tea bags and not having tea bags and individual things. Now that was so important to her. She made the shift and then felt she was fine now to go and get her London career going, having moved Minters to tea bags that dangle. So, you can start reasonably small, but I would start with your values and purpose and writing down and knowing what you can do, because I do see organisations struggling to get the resources to actually do it credibly. And equally, Housing Foundation, we're super small, super lean. We're a charity, but actually, what can we do? We can think about sustainable finance. We can think about what we require our developer deliverers to actually deliver and how they deliver the projects that they do for us. But start with your own purpose.
Sarah, I think you'll probably want to keep running on that particular note. Another great question from Alex this time. Does your ESG policy influence the type of clients that Minters represents, as well as your internal activities?
So as lawyers, our first duty is to the court. We can't say we don't like you very much, but we are very, I suppose it is helping us with our clients and our engagement with our clients, because I can't think of anyone that doesn't want us to have an ESG policy. So we're sharing it. We went out and shared it with a lot of clients early on to get their feedback around, is this something that's important to you? And to be honest, you're a little hesitant first going out. We were doing this in 2019 and 2020, sharing a sustainability policy or an ESG policy as a law firm. So, we probably expected a bit of, yep, of course you do. But we just got such great feedback. People were asking us for it so they could actually, because we structured it very strongly around, we have very, very strong values and we structured around those pillars. So I don't think it influences the clients that we have, because we represent people unless we sort of are conflicted, but it does represent how we engage with those clients and how we have sort of those really important conversations about being aligned with them and aligned with values and becoming trusted advisors.
Excellent. I'm going to leave one of the trickier ones to last, so kind of get warmed up. But we've got another one here from Kate Shivers. What are the key changes in industry that have enabled achieving broader outcomes? And what might enable more of these in the future? Each of you have a very different perspective, but you're all in many different ways involved in infrastructure. So I'm going to ask you to frame your questions specifically around infrastructure, your answers at least.
Well, I know for our, I mean, it's actually a reasonably difficult question to ask with any specificity. But I know our industry, it does come back to the trend that I mentioned that Dean referenced, is the global need for reorienting economies so that they use renewable energy is driving the way that we run and manage our business. And the challenge that represents for anybody involved in infrastructure is new technologies, deployment of capital at scale, and the demand for that capital is how can I get a reasonable return on it over time, given the changes that I'm facing. So, yeah, it's as I say, a difficult question to answer with specificity, I think.
We've talked about sort of the regulatory compliance piece. I think one of the other key drivers has been a shift, certainly from the government, central government and also local government following perspective around how they procure and the procurement rules, and a shift away from reasonably structured, basically price scope type evaluations into broader outcomes, and actually bringing through as one of the fundamental planks of procurement in the procurement rules, broader outcomes, and delivering broader outcomes and pulling that into the evaluation of how infrastructure is procured, because all of the public sector led procurement of infrastructure has to be through those and compliant with those rules. So I think those kind of fundamental shifts in how decisions are made to procure infrastructure through the procurement rules are really, really important.
Yeah, I was going to throw perhaps a slightly different aspect into this, and that is, I think when I think about infrastructure to date, we've probably looked at the sustainability being around. Actually, the last discussion was really interesting about the savings made from the truck movements is a really good one, and we can start to think about embedded carbon as being another measure. But I think where I sort of see things going quite quickly is going to be the one I touched on earlier, is the impact on nature, and I think nature-based solutions are going to are becoming and will become even more so central to how we think about building infrastructure. And I suppose in the past we might have thought about the need for green spaces, for example, as something which is sort of a nice to have, but I think we're probably starting to see that actually there's co-benefits come with that that are really valuable. And so what I'm sort of starting to see when I look around on this topic is that there's those co-benefits can be really good in terms of environmental impact, but actually there's examples where embedding nature-based solutions into infrastructure build can actually also deliver lower costs in terms of the project. So that would sound like a really good win-win, but one that I think is going to become increasingly front and centre in terms of the expectations from people in this room going forward as well. So probably going to be quite challenging. And probably the big challenge really is that we aren't very good at valuing those co-benefits. When we're talking about social or nature-based value, then how do you measure something that is perhaps intrinsically priceless? So, and that probably just raises the issue that I think as these things start to shift, we're finding that there's some really challenging aspects in terms of not only how we assess risk, but given that climate-related risks are something that are non-linear and quite different from the sort of risks we've had to measure and manage before. It's quite likely that at this stage we are evaluating the size of those risks and potentially the opportunity as well.
And can I just give a shout out for the Infrastructure Commission on that actually we are seeing that conversation coming through in the recognition of natural assets as infrastructure. Obviously we are tasked with physical infrastructure, but the fact that those natural assets are now being recognised as infrastructure and part of that system is coming through in our strategy. So I think that is supporting what you're saying.
I think the policy lens is a really important one. And today we've been hearing a little bit about not just the blue and the green in terms of natural assets, but equally cultural infrastructure. And it really lends itself quite nicely to the question that's been submitted by Virginia Hogan, which is really around balance. And it's true that we don't have many frameworks for valuing some of the externalities or the less monetizable aspects. But her question is really around balance and how we ensure momentum for environmental sustainability when 72% of New Zealanders are more concerned with the cost of living crisis. And how we go about doing this might be quite a tricky challenge. Any thoughts on that one?
Yeah, it's interesting. I look at perhaps another sort of statistic that came out last year, and that was really a survey of KiwiSaver investors, where somewhere around 70-odd% said that having an investment manager that was value aligned in terms of the way their money was managed was important to them, and they would, over half would shift to find a manager who would do that. So yes, on the one hand, you've got some of these hopefully short-term aspects that are moving or coming up in terms of importance that people are grappling with. But I think at the same time, the enduring aspects are going to be that there's still going to be a big focus in terms of that value alignment, and whether that's from people, investors who are providing you capital, or whether it's consumers. And possibly there'll be some consumers who are, because of necessity, are going to be perhaps consuming products that aren't value aligned. But I think the overriding trend that we're sort of seeing coming through is that consumers are increasingly looking for businesses that align to their values, and I don't think that's going to change in the medium term.
I'd just add, I think that there are some kind of non-negotiables going forward as we move forward. And when I look at some of the stuff that we are working on in the infrastructure space, so if you look at water, and we have a massive infrastructure deficit of 90 to 180 billion. If you look at our transport infrastructure and you see the huge deficit there, we are making these huge decisions going forward. We have to fix that gap. I mean, it's just entirely unacceptable that we, as a nation, have this deeply underinvested infrastructure. And I don't see it any other choice as to, and we've got the recovery, storm and cyclone recovery infrastructure that we need to build, and we don't have any other choice other than to build in as a fundamental criteria of that sustainable and resilient infrastructure. It's not a choice, and I agree the cost of living crisis is extremely confronting, but we can't not do anything if only 65% of New Zealand has acceptable quality drinking water and people's homes and livelihoods are being washed away. We have to invest in a sustainable, resilient way, and that must be at the core of what we do and at the core of the decisions we make. And I don't see these things as mutually exclusive things. I think they just have to be built in to the decisions we're making. We don't have a choice other than to do that.
And I'll add very quickly, as people and businesses, we're always juggling priorities. Right? That's, things are important today and not as important tomorrow. But so you've got to have your feet on the ground. You've got to be able to move forward, take one step. But you've got to have your eyes on the horizon. Businesses, particularly capital-intensive infrastructure businesses, if you're not thinking about the challenges that you're going to face in 20 years' time, you're only confronted by the priorities. Cost of living is a priority, there's no question. But if you're not investing and thinking about that long-term outcome, then you are gonna trip over. You are gonna fall over yourself. And so Sarah and Dean have both said is we need to be mindful of those changes over a long period of time while juggling shorter-term priorities.
Well, we might wrap it up there. I think I'll bring us back to really where we started today, and that is that the purpose of infrastructure is to enable people to thrive, and that does span multiple different dimensions. And being an election year, I think it's fair to say that we won't take the politics out of infrastructure, but I do believe that we can put infrastructure sustainability into the governance of infrastructure. Please join me in thanking our panel.
Thank you.